Really quick before we jump into the video, I want to just mention to you guys, we currently have a promotion going on where we have a 7-day free trial going on for our group, Internet Accelerator. I really recommend you check it out. It's at no cost to you. You get 7 days to try it out. And if you put in the work, you can probably make the monthly payment within those 7 days. And then basically you're going to be joining the community for free. So I really recommend it. It's going to be the first link in the description down below. There's literally nothing to lose and everything to gain. So go do that right now if you're not already in the group. Anyways though, in today's video, I'm going to be doing a recap on what we saw here on FOMC. And I'll show you guys one of the trades I took here, which was some SPX puts up here at 12.19. So this candle right here, let me zoom in a little bit for you guys. So this candle right here was my entry point, 12.19. And the reason I decided to enter that, there's actually quite a bit of reasons, so let's start going into them. The first overall reason why I decided to jump into puts here is because of this right here, our initial reaction. And so what we got in the first reaction was we ended up breaking down. So basically all day today we were trading in the same little range here, which is why I ended up drawing this demand zone here. And then obviously once we got FOMC, we got this huge reaction here, ended up selling us all the way down to 3,818. So a pretty significant move there. We got the numbers released, 0.75 basis points hike, and then we also got the GDP and rate hike predictions. And so I have the numbers right here pulled up, and that was pretty significant because of how drastic the changes are. So in June, their projection was that in 2022 the change in real GDP would be 1.7, but it came in at 0.2. And now their projection going forward for 2023 is now lowered from 1.7 to 1.2. And then even for 2024, they lowered it from 1.9 to 1.7. So the results they were expecting to get by 2023 is going to be pushed back all the way till 2024. And then if you can look here at the federal fund rate, their June projection was 3.4, and it came in a whole basis point higher at 4.4. Now I'm not going to pretend like I know exactly what all that kind of stuff means. I'm not too well versed in all that. You know, I think common sense, everybody can see that obviously those numbers are bad, and you know, it's not like great news was announced or anything like that. And most importantly, the reaction we got to that news was overall bearish initially, and then once we get Jerome Powell, that's typically when markets starts reversing. So let's see where Jerome Powell starts speaking. It's around 11:30. This candle right here, which basically marked the bottom, because once JP starts talking, they're gonna see what he has to say. So we got basically a move all the way back to where we basically started before the meeting. Typical stuff. You usually see something like this every FOMC. So I didn't take too many trades around here. I think I took a straddle right before the meeting, and then I ended up selling that, made profits on the puts obviously, and then lost on the calls. And then I ended up taking another straddle right before Jerome Powell started speaking, somewhere around here. And I actually exited before he started talking because I was already nicely in the green. This time, again, we profited on the puts, lost on the calls. It would have been smart if I kept the calls, because obviously I think those ended up going, I sold them at like 12, ended up hitting like 50 or something insane like that. So both straddles ended up being profitable. And then I didn't play any of this, just let it play out. And then we started wicking up here right when we got to this demand zone, which if we zoom out, you can see has been in play for the past weeks. Let me get rid of that. You can see it's been a pretty significant zone here. It was previous support, and then eventually we ended up breaking down on Friday here. And then we got a retest of it, rejected, and it's notable to see the rejection we got. It wasn't just like a small rejection, it was a pretty significant move here we got. And then with FOMC, we ended up coming all the way back up, but then right when we got to that zone, we ended up stalling. So that would have been a decent spot there to start puts. I didn't start puts just because I had already made decent profits, and I actually told myself I was going to be done trading. However, once this next opportunity showed up, I just had to take it. So I did. So you can see perfectly once we got to that zone, we ended up selling, got some wicks, then we got this big reaction. That right there was very telling right there, and that made me bearish. However, like I said, I had already made decent profits, and I wasn't sure exactly if we were gonna come all the way back down and retrace this whole entire move. So I didn't end up taking puts. I wanted to see how the first bounce off of this move would be, and you can see here I talked about this a lot in the past. Let me get rid of some of these other lines here. Alright, so you can see this is the high we established, pretty clear. And then I always like to wait for that first bounce to see how they react to, to this drop here, to see if maybe they would come back up and retest the zone. If they do that, they can potentially break us above it, and then obviously it wouldn't make sense to play puts. So I waited for the first bounce, and we made a lower high. Obviously, as we're printing this candle, you're not sure if that's the high yet, but then we get this big rejection once again, this big red candle. So then at that point, I'm like, okay, I'm still leaning bearish, but I want to see a little bit more, because at this point I think JP was still talking, so I didn't want to jump in prematurely right there. He was still talking at this point, and then they could have obviously been accumulating. This could have been like a bull flag, could have broken out there, so couldn't risk it just yet. But as this was going on, I was debating puts here, although there was no like big confirmation yet. I did like the fact that it was establishing a lower high here, and that it was coming off this supply zone here, so I like that. So I was considering puts, and I was watching the 3840 puts here on SPX. They were moving from around like $14 up here to like $18 down here, and I found it kind of interesting. I was watching the premiums move and how they were reacting, and every time we got a little bit closer, like we started coming down here and we started wicking, every time we got low here, they would jump in premiums. Like they would jump up to like $19, and then we got this little pop here. They went all the way down to $12, and I was so close to entering right there. I was so close to entering some of those at $12, but I decided not to. And then as we started coming down, we started coming back down here, and I told myself I was gonna wait for this zone to break here, because this zone I had drawn it obviously from previous price action. I told myself if we break below this low, I'm gonna jump into puts, which is what ended up happening. We broke this zone, and those puts just absolutely exploded. You could see people were jumping right into them, and they went from like $18, $19 here to like 25, 26 real fast. And then obviously we got this huge candle here, came all the way down here, and I missed my entry like here. Like the move just happened so fast. This is a 1 minute candles. I missed my entry there, unfortunately, and then obviously I was watching those puts just absolutely print. And once we got down here, I'm like, okay, this zone's pretty small. We're probably gonna push right past it. If we do that, I'm pretty sure low day's gonna come here. We've seen these type of moves happen before, where we get initial move, reverses, and then we get that true move, the real move that they wanted to happen. So at this point I was really close to chasing it, but I decided no, let's wait for that first bounce. I found it really hard to believe that they were going to bring us all the way up and then really push us higher, because we really hadn't seen the big move yet. If you think about it, from basically where FOMC started, we were only down 0.8%, which I mean on a typical day that would be a pretty significant move, but on FOMC day where you can see 2% plus moves, I still thought the bulk of the move was yet to happen. And then we started stalling here right in the zone before we broke out to the downside. So that was very key to me. And if we came all the way back down and broke back below this zone here, which was my initial entry point that I wanted to enter, I was going to add to my position. We ended up getting that. So on this candle here, as we broke below this zone, like I said, while we were watching that zone, it's been previous support here, basically from all day. Also, if you look at volume profile, it's where the highest volume has been conducted all day. It's been the previous zone here where we got that flush. We got the flush here. So it's just been an overall key zone. And if we started breaking down below that, there wasn't much resistance to stop us. Like obviously we had price action down here, but this all happened very fast. So if we got the breakdown, like I said, my target was down all the way down here to low of day. So that was a good risk reward there. My stop loss would have been somewhere around here if we ended up coming back up after breaking down and seeing something like this. Then obviously I would have to exit the play there. But we ended up coming down. We ended up breaking the zone, having a little bounce here, and then coming back down aggressively. We broke this low here, and then we came all the way down to low of day, made a new low of day, had a little bounce there, basically back to this zone, previous support turns into resistance. Didn't even come all the way up there actually. There's a line I have drawn from some previous price. I don't even know where that's from, but obviously we came into this demand zone, so we were expecting some kind of resistance there. Saw a bounce, then came down and extended much lower. So those puts, my entry up here was around 12, I believe. They hit a high of like 10, but I ended up entering around like 12, I believe, and then they ended up going all the way to like 30, 38. They hit 38, so that was insane. And these original puts I was looking at 12 here, those ended up hitting like 60 something, just absolutely mental. But yeah, so these zones ended up working pretty nicely here. And again, the key points from this trade were the volume profile, the key demand zone that we ended up, demand zone, because it was the previous support that we ended up playing off of, the fact that we ended up making a lower high here, and you can say this is the next lower, this is the next lower high, so it's continuing that pattern. And also put call was rising this whole time. I'm not sure, I wasn't paying attention too much to what it was before FOMC, but I do know it was around the 80s earlier today. I think it was even as low as the 70s, like right at open. So that ended up climbing all the way up to 0.98. At this point, it was around 0.93 or something like that. So that was another indication. Ticks were starting to get negative. And also those puts I was talking about here. So they were around $16 here, $18 here, $12 here. When we got this big move, like I said, they jumped, like I don't remember what they jumped up to, probably like 30-ish. So they went from $12 to $30. Then up here, when we got this big bounce, you would have expected them to devalue a shit ton, but they were holding value this whole bounce. Like obviously they were going down in value from 30. They went down to like 24, 25. But then up here, they were still around like $20. So that was very telling, because back here, they were $18, $16. And then over here, they were $20, which were basically at the same price here, but you can see that it's changed, right? People are willing to pay more for it because they expect a move down. And so that was also another telling factor of why I decided to jump into puts there. And then we got the huge move down, which was just an amazing move. Keanu caught something similar. I'm not sure exactly where his entry was, but he was able to catch 500% on this. I think he was playing 0 TTs. Unfortunately for me, I couldn't play that because I was playing tomorrow's expiration, since Webull is slacking behind and they don't let you trade past 12 p.m. Zero dates. But still caught an amazing play there. And hope you guys banked. Obviously, it was a wild FOMC. Maybe not the easiest one to trade, because there was violent moves in either direction. But you get the idea. And hopefully, you guys are able to better understand price action and reasons for going short here, and why there was indications that we would get a move like this in this price action up here. Also, something to know is when you get something like this, where there's like huge candles, big reaction, and then it reverses all the way up, but then it comes all the way back down, that's very strong indication there. If you ever see that kind of pattern, be a little bit more open to chasing. Obviously I would never recommend anybody chase, but don't be afraid to like short like somewhere around here. Maybe wait for that first bounce. Like this would have been perfect right here, this perfect trade where you get the big reaction, reverses, looks like, like, okay, maybe that's a joke, psych, they bring it all the way back down. Maybe you don't want to chase this candle, but wait for that first bounce, and then once you see that first bounce, especially if it comes all the way back to here, perfect entry right there, and then you catch another pretty significant move. Because like you might feel like you're chasing down here, but we still got another 1.35% move. Like that's 50-point move on SPX. Like that's massive. So anything like this, even if it's to the upside, so let's say it was initial reaction big up, comes all the way down, then it comes all the way back up, wait for that first retracement, possibly to around here, go along, and then you can get a significant move up there. And again, everything's always based off risk reward. So if you're entering here, you can probably put a stop somewhere around here. So you're risking that, let's say 36 to 43. What is that? Like 8 points, maybe 8 points for the potential to make 50 points. So the risk reward is there, obviously. And that's gonna be, it's not gonna be an everyday type of trade, because obviously you need increased volatility for something like that to happen. But just letting you guys know, something like this, very strong indication there. But you need to see a fast reaction. Like, these trades happen very fast, where like if you don't see this start rejecting immediately and start breaking down, you get out pretty fast. Like, these are pretty fast trades here, where you know right away if you're right or wrong. But yeah, hopefully that helped you guys. Hopefully you guys were able to navigate and trade FOMC. You guys stayed safe. If you were break even today, small red, don't take it too harshly. Like, these type of days are pretty tough to trade. Yeah, there's tons of opportunity, and if you felt like you didn't capitalize, you know, it's tough. It's tough trading like something like FOMC, and don't feel too bad about it. But as long as you're able to learn from today, even if you had a red day, a small red day, still congratulate yourself and just keep on pushing. Other than that, I'll catch you guys in the next video. Thank you so much for watching. It's been me, Zero, and I'm out. Peace.